Uh, So, welcome, the students. Bookkeeping is the process of identifying financial transactions, then recording them in the books of accounts, and there are different types of books of accounts. So today we will discuss about those because it is always not possible to directly enter all the transactions in the journals itself. It is very difficult because an organization has different types of transactions, and to make the entry easy and to keep the records, one type of records at one place, sometimes they go for maintaining different types of books of accounts, and those books of accounts are called subsidiary books of accounts because from those books of accounts the entries are made into the journal and then posted into the ledgers. So business, as you know, business transactions are first recorded in journal and then posted into a ledger. When we go for any kind of transaction, we record those transactions in the journal, and then after journalizing and record those into the ledger. So in practice, number of business transactions are too large. You know, I have already told you that there are organizations who are very large and they go for different kinds of transactions every day, and thus it becomes difficult to record all of them in one book of primary entry. For example, most of the transactions may relate to receipt and payment, to cash, sale of goods, purchases. So these are the types of transactions that an organization go for, and recording all those transactions in a scientific manner in a journal is difficult, time consuming, and thus what is done in practice is that different kinds of books of accounts are maintained, and those are recorded in the concerned book of account, and from there they are now transferred to the journals to make it convenient, to make it easy. A register of this type is called a book of original entry or a primary entry, where we make the first entry, primary entry, initial entry, and that is called original entry, book of original entry. It is a special form of a journal. The system by which transactions of a class, a particular nature, similar type of transactions, are first recorded in a book, especially meant for it, and then posted into a ledger is called practical system of accounting. So to make the system practical, the transactions are first recorded in the book of original entry, and those original entry books are the subsidiary books of accounts. We will discuss in the next slide. So subsidiary books of accounts, these books of primary entry are also known as a special journal or subsidiary books of account. I have told you because ledger accounts are prepared on their basis. So ledger accounts are prepared on the basis of the information, the records maintained in these books, and then transferred to the journal. And from journal, those are posted into the ledger. So for posting in ledger, we require the information, and the first entry to make it practical is done in the subsidiary books. Without this process of ledger posting, a trial balance cannot be drawn. You know, for preparing a trial balance, we require posting in ledger, and for posting in ledger, we require journalization, and for journalization, we require information in a systematic, in a comprehensive, in an easy manner, and to maintain, to make it practical, to make it easy, different types of books of accounts are maintained, which is called primary entry, books of primary entry, or subsidiary books. So today we will discuss about those subsidiary books. The ledger is, you know, called the principal book of accounts. So ledger is the principal book of accounts. Then we have subsidiary books of accounts, which are cash book. So what is cash book? Cash books are maintained to record cash receipts and payments. All those receipts, all those payments which are in cash is maintained in the cash book, including banking transactions. So organizations maintain the cash book to record the cash transactions as well as the banking transactions. Whatever amount they have deposited in the banks or withdrawn from the banks, so those are also maintained in the cash book. Then next is purchase book, to record credit purchases of goods or the materials and stores required in the processing process. So to record credit purchases of goods or the materials and stores, we maintain inventory, so whatever the goods are there in our store, in the stores of processing plants, those are recorded in the purchase book. Then sales book, to record the credit sales of goods by the firm. Sometimes firm supply the goods, and then after the supply, they receive the payment for that. So in between there is a gap, and this kind of gap, this kind of supply is considered as credit sale. So all the credit sales by the organization is recorded in the sales book. Then purchase return book, to record return of goods purchased on credit. Sometimes we purchase the goods, then we find that it is not of that quality or there is some problem, and then we return that purchase. So such kind of purchases are recorded in purchase record book, purchase return book, purchase return book. Then there are different kinds of subsidiary books. Sorry, the order of the slide has changed. So there is sales return book. Sales return books to record credit sales made by the customers. So sometimes customer purchased from us and then found that the product has some problem there, and they return the product. So such kind of returns, sales returns, are recorded in the sales return. Then bills receivable, to record the receipt of promissory notes from various parties. Sometimes other parties owe to the organization. They promise that they will pay such and such amount after a certain period, and such types of bill receivables are recorded in the bill receivable books. Then bills payable, to record the issues of promissory notes to other parties. Sometimes organization also promises to other parties that, okay, after a certain period, I will pay you this much amount. Maybe because of their share in the ownership, or maybe for other reasons. But such kind of promissory notes by the organizations are recorded in the bills payable. Then after all entering into these subsidiary books, the records are transferred into the journal proper. So last is journal proper, to record the transactions which cannot be recorded in any of the books mentioned above. So there are other, like sundry purchases are there, sundry expenses are there, different kinds of sundry means heterogeneous, small heterogeneous transactions. So those are recorded directly into the journal proper, because we don't have a special books for that. So those types of transactions are recorded in the journal proper in the form of sundry book, and then there are a special purposes book we have discussed, and the records are transferred from those into the journal. Then cash book. What is cash book? Cash book is a book of primary entry in which cash and back transactions of business are recorded chronologically. So we have already discussed that all cash transactions made by the organization and the bank transactions are recorded in the cash book, and those are recorded systematically, chronologically, means when they occurred, the date when they occurred, in the order of date when the transactions are made. So this type of recording is called chronological recording in chronological order. So cash book contains the information, chronologically maintained information of the cash transactions, receipts, and payments, as well as the transaction with the banks. It is imperative to regularly know the cash or the bank balance. So it helps in knowing that because we have maintained records, we have scientifically maintained records in the cash book. So we can easily find out what and how much we have done in cash, transactions in cash, and there this book helps us. Then cash receipts are recorded on the debit side of the cash book. So as the rule of debit and credit, all receipts, cash receipts are recorded on the debit side and cash payments are recorded on the credit side. A balance is worked out by deducting the total cash payments from the total cash receipts, and the rule of applying the rule of accounting, we can find whether there is any deficit or not. Then features of cash book. Only cash transactions are recorded. Cash book contains the information, records which are related to the cash transactions. Only cash transactions. Cash and check receipts are placed in the debit side. All the cash that we receive, the organization receive, in terms of check are recorded in the debit side. All cash and check payments are recorded in the credit side. It enters only one form of transaction, and that is cash. We have discussed cash and bank transactions are recorded in chronologically in the cash book. It performs the function of both journal and ledger at the same time. So, because we have the complete information, we have the complete information about all the cash transactions and what we have received and what we have paid. So it is very comprehensive. Cash transactions are recorded in the cash book. Ledger accounts are prepared on the basis of records in the cash book. So there are three types of cash books. One is simple cash book or original column cash book. Only cash transactions are recorded in this type of thing. Then there is two column cash book. While we were discussing about the bank reconciliation, I have mentioned about the two column cash book. It has cash book with cash and bank column. So here we have the cash column and then we have the bank column. In cash column, we record all the transactions of the organization which is made in terms of cash, and then all the transactions of the organization with the banks. So it has two columns. And then there are three columns cash book also. Cash book having cash, bank, and discount column. Sometimes discounts are being paid or being received. So we also enter those discounts into the cash book, and for that, three column cash books are applied. So these are the special types of books of accounts, cash books. Simple cash book has this format. It looks like an account with one account column on each side. One side is debited, next is credited. On debit side, all receipts are maintained, and on credit side, all payments are entered. So it has date, particulars, voucher number, ledger folio number, and amount. Again, date, particulars, voucher number, ledger folio, and amount. And you know what is voucher? Vouchers are the record of transactions by the organization. So it is the evidence of transaction. It is the evidence of receipt and payments. So here we write the voucher number. So this is a typical format of simple cash.